Ladies and gentlemen, look up in the sky. It's a bird, it's a plane? Absolutely not. It's Dan Ives of Einstein and Ives, the greatest financial advisor in the world, breaking barriers, talking stock, talking volatility, talking tech, and just talking with me, the Einstein of Wall Street.
Dude.
My man, welcome back. So look, you know, it's not often, and we've been talking now for a couple of years, and there's barely been a down day on Wall Street over that time, although we did have February, March, and April. But I would say over the last couple of months, we've had, at best, 3 or 4 days, and the pullbacks have been at most shallow. We had that 2.7% pullback the day that, you know, the rare earth minerals and the two, you know, leaders of the world were sitting in the playground, you know, tossing the ball with each other, and they all took their balls and left the sandbox. But since then, it's been trading at record highs. I think we're about 41 record highs across the board in 2025. However, we had the last couple of days have been curious at best, right? We talked yesterday morning, first thing, the market was down 1.1%. We haven't seen one of those mornings for a while, and you're my first call, right? And boom. And what did you tell me?
I mean, when you think about in this tech trade, the golden childs are really Nvidia,
right,
Palantir, Microsoft, wow, the Mag 7.
Right.
Palantir, those earnings were off the charts. Like
good chart, charts, good.
The street was thinking 85% growth, they came in 120%.
Unbelievable.
So it was almost a quarter, Picasso-like quarter.
Right.
And the stock sold off.
8%, 9%.
So investors were like, hold on a second. If they did this, and this is as good as it gets, perception,
right,
what does that mean? And then it goes back to the bubble moment.
Right. Which has been a bit of chatter lately, everybody. Everyone's looking. When the market is trading at record highs for so long, there's always going to be something, and tech particularly, there's always going to be somebody who's, you know, those bears, right? The bears have not gotten their day in the shade. They've had to go back months ago. They went back in, they took their slushie, and an old piece of pizza went back into the barn.
Because the bears are in the basement. Mom's bringing meatloaf down to the basement, and the bear.
Hey, Ma, give me the meatloaf.
And the.
Hey, Ma, give me the meatloaf.
And the bears, they're looking for something. They're looking for bubble.
Right.
Is there a crack in the AI trade?
Fragility in the market. This is too good to be true.
And I think Palantir, because it's such a the fact that it sold off, it created a ripple. And you saw tech stocks sell off across the board. You know, obviously Michael Burry, Big Short.
Right.
He
jumped on that train.
Very well timed in terms of his
yes.
short. So it kind of creates that fire. So look, me and you have talked about it. We have 1 to 2 more years left in this tech bull market.
Right.
You're going to have these moments of these sell, but I just view it as like it's opportunities to own the winners as the fundamental story. Think about pieces of the puzzle. CapEx, big tech,
huge.
Accelerating. Nvidia, chip, demand and supply, 10, 12 to 1.
Growth, massive
Palantir
growth.
Use cases, expand.
Right.
US, China, de-thawing, now there's a trade frame.
Yes.
So look, I just view it as like it's a risk on, and you use these opportunities to buy more tech.
So look, we've been talking about this every time that the market's been pulled back, and everybody's dying for a pullback. Look, you've got this catastrophist narrative that when we sell off, that oh my God, it's the end of the world. But just look at the numbers. And like if you're up for 272 days and you're down for 1 day, it's suddenly like the world's coming to an end. That is absolutely an immature, ridiculous way of looking at the market. If we look at the pullbacks that we had in 2020, 2024, we looked at them in 2025. We looked every one of them, virtually every pullback since 1903 when this friggin' building was built, and I was standing here. I wasn't here in 1903, no. I was here though for George Washington's inauguration, and I was hanging out with Alexander Hamilton. He's buried across the street.
You were good friends with him, right?
Alex and I I called him AH. We had a great relationship. He's buried across the street. I'm still here trading the market. But anyway, there are two those are opportunities. Every pullback, even every crash that we've seen. Yes, the 07-08 crash took 8 years to get back to even. You had to really hang in for the long term. But if you think about it, the COVID pullback, the COVID crash, we can sincerely call it a crash. We were back to even by August. Okay, so these pullbacks that we're seeing, they are pullbacks. What are pullbacks? They are opportunities. You can call them a pullback consolidation sell-off. They're opportunities. If everybody is sitting there going, I don't want to pay the high for Palantir, and you had a pullback of 8-9% yesterday, what was that? That was an opportunity.
But also, it's like the valuation argument being like, okay, how expensive are these stocks?
Right.
Could you judge? Is it a dot-com bubble?
Tell me that a little bit about. You told me the other day that when during the internet bubble, we were trading at 30 times revenues.
Now
we're
27
times earnings.
As well as also, this tech cycle
Right.
is being led by big tech, $1 trillion on the balance sheet,
Right.
300 to 400 billion
Yep.
of free cash flow. The point is, if you just focus on valuation,
Right.
you've missed every transformational tech stock the last 20 years.
Right.
Is Palantir expensive? Very expensive.
Right.
But you have to be able to look out over the next 2, 3, 4 years what normalized valuations look like at what will be a normalized growth rate. To give you an example, Palantir of $5 billion a rev, it's probably $10 billion in the next 2 years.
Okay.
So that's kind of how you have to trajectory.
So you know what? Look, as I mentioned it the other day, I think we talked on that interview that the SoftBank CEO. Look, we talk Nvidia. 2024 February is trading at $108. 2025 February is trading at $924. June it was trading at $1,200. Then post split it's trading at $210 post split. He feels that net basically, if we're looking at a 5-year valuation, it's undervalued at this point. And you would think Palantir is the same, right? Go ahead.
Exactly. And for the first time in 30 years, the U.S. is ahead of China
Right.
when it comes to tech. And it speaks to my view that, like, we're going to continue to have these moments. But the reality is, when you look at earnings season, it further validates the thesis.
Yeah. So look, I mean, look, we have to address this for a minute because you know what? Look, things have changed. I talked about it too, that there's bull market, bear market, the yield curve, and all the terminology, recession, depression. I told you that you know, that day in Davos with Trump 1.0, when the market went down 1,400 points, rallied 2,800 points, we actually went by definition from a bear market to a bull market. All bets are off. The terminology that is archaic is no longer has any value to us. And so if you start judging things that way, the bottom line was the earnings were blowout. In a market that's got so many different tranches of people, you've got retail, you've got institutional, you've got hedge funds, you've got sovereign wealth funds. You've got so many different people with different axes and so many different, you know, there's so many secondary and tertiary derivative trades going on. Why could they have blowout earnings and sell off 9%? There's 10 different reasons.
But also it's like the crypto trade, like look,
Right.
Ethereum obviously blew up 3,500.
Right.
Bitcoin yesterday went
Broke
below
100 grand first time.
So it's all, even gold sold up.
Correct.
So you're starting, there's just jitters out there that you're feeling.
Money's moving around.
Exactly.
Right, and that's important to know. And so the bottom line is, if you look at it, if you go with that catastrophist mainstream, that's what we do. Because that catastrophist mainstream media approach to this stuff is going to let the boat's leaving the station without you, right? Every single time.
But how many times have these moments happened?
Right, we've seen them a lot.
And they've created
and they've been opportunity. Every one of them has been an opportunity. And look, and we're the first ones to admit that we missed the opportunity February, March, and April. Because you and I were sitting there, we weren't able to put ourselves in Mr. Trump's head to know what his next plan was, and he was going to tell everyone, you know what?
What was those first 2 weeks of April, Liberation Day?
Correct.
Exactly.
That was what was questionable. Okay, so we're starting to bounce back a little bit, right? We are in November. November historically is the strongest month of the year. What do you see unfolding here? Let's pull back from tech. Let's talk about the overall marketplace. And also let's talk about what you just said, because we're starting to see a breakdown. Look, for a while there, 2 weeks ago, they were buying everything that was not locked down. They were buying crypto, they were buying gold, they were buying Russell small cap. They were buying everything. Okay, and everyone was going, there's never another down day in gold. Sure enough, what ended up happening? Look, markets go up until they don't go up anymore, right? That's where that reversal happens. Sometimes it's a little longer term, sometimes it's not. We're starting to see money move around, where you're seeing crypto sell off aggressively. You're starting to see gold turn around from 4,400, 4,600, which was amazing. Yep. These valuations were crazy. So we're starting to see profit taking, perhaps? What do you?
I think profit taking, little risk off. You're seeing margin, maybe. I think there's some margin
activity. There was that big weird crypto trade that happened a few weeks ago. That was a margin fall.
October 10th. But I think, look, the reality is I think you have a consolidation market rips higher into Thanksgiving.
Okay, so we're looking at Dow. I'm already printing out my Dow 50,000 hats.
No, but that's
Dow
S&P
S&P 7,000. You call that in January.
To me, so it's like I feel like rips higher.
Right.
Maybe into January you'll have a fear trade in terms of tech.
Right.
The reality is like Fed, despite what a posture, and they're going to have to cut.
Right.
Power replacement happens in May. To me, it's like, look, it's like a path higher, much higher.
Right,
but we're
with
going
a
to
little
have
bit of a bumble.
Yeah.
So look, I love the fact that you and I see things so differently. Everybody came out of the gate on that Fed day when he said, and it was very clear because we know that everybody hangs on every word on the news conference. We knew the number was 25. There was a 99% chance of that. But right out of the gate at 2:30, and you saw the market react to it, was a cut in December is no longer a surety. That was his word.
Dude, there's a better chance of me replacing Otani on the Dodgers than them not cutting in
and
December.
me be the center of the New York Knicks in 25, 26.
Even though you have
season.
a good jump shot.
I do, and I do have a center court hook that I'm very famous for. Boom! It gets every time. So, but everybody got wrapped up in that, and that sell-off lasted a moment.
But that creates the opportunity.
Correct. And the opportunities, look, if you're out there and you're trying to wonder, I don't want to pay the high of the market, if today's high is tomorrow lows, you're not paying the high of the market. If you've stood on the sidelines for the last year or 2 years, we are up 100% in the S&P since COVID. If you've stood on the sidelines every time and been afraid that every time the market turns around and sells off, you've got to back away, sell everything, and run, you've missed nothing but opportunity.
But also, it's the winner. It's identifying the winners.
Yes.
And who do you own?
Okay, in your portfolio, and that's what we're talking about. Ives, Dan Ives' 30 best, right, is a blowout over $1 billion under management. Already, probably the fastest moving in ETF that's come to market.
Now that you mention it, it is pretty fast.
Yeah.
But the point is, because it's a theme to play the winners in AI.
Right.
And to me, it's a fourth industrial revolution, and you can't just own you have to own what I believe are sort of the names to play the theme.
The last thing I'm going to say is that there are stocks that can take a market up or down. In the old days, they used to say when E.F. Hutton speaks, people listen. Sometimes when one individual name, and Nvidia was that for a while, where Nvidia and Apple and Nvidia and Palantir is becoming that name. And that's a good thing.
And the reality is I'd rather own tech in the left lane of Ferrari going 100 miles an hour.
Right.
You get obviously you get a speeding ticket, some points in the license, cop pulls you over. Rather than owning value in the right lane in a minivan, going 45
Watch out
miles.
for those white minivans.
Going 45 miles an hour with a bumper sticker saying my kid's an honor student in third grade. I'd rather own tech.
I'd rather own tech. You are the greatest. You know what? We're breaking it down here. All about tech, talking volatility, talking about the market, talking about you getting involved. And that's all I got to say about that. Einstein and Ives, kicking butt, taking names. Let's go.